Good morning, friends. Today is Wednesday, December 14th, and my video today is going to be a short one about how the smart money traps unsuspecting day traders into making trades that are going to be losing money for them. And so you're going to be interested in this one. And by the way, looking at today's economic calendar, you need to be aware that at 2:30, Fed Chairman Jerome Powell is scheduled for a news conference where he is going to tip the Fed's move on interest rates. They're expected to rise another 0.5%, which is going to be or should be good for the market, although that news might be already baked in. We'll see. Let's move over to the chart of the E-mini for yesterday, December 13th. Now, yesterday, there was a pre-market CPI report that came in better than expected. So remember, I want to show you how the big boys trick you into making trades, maybe not you, but trick unwary traders into making trades that are going to cause losses. So here we are at 8:30 yesterday, December 13th. Just prior to the announcement at 8:30, the market shoots up. Now remember, during the pre-market, not a lot of people are trading. Trading is thin, so it doesn't take much to move the market. And the big boys have a lot of firepower to move the market. And so they buy some contracts, and they start the contracts moving up. People are watching. There are people trading pre-market, and they're looking, they're watching, and they know this announcement is due. So they see the market shooting up, and they buy. And what happens? Immediately, the smart money sells, and prices go back down, and they rise, but just generally. Now, the smart money has already made a lot of money right over here. But what happens? They keep buying. They buy some more. They buy some more. And let me expand this so you see it a little better. They buy some more, and some more buyers come in because they don't want to be left at the station when the train pulls out. So they come in. And the smart money throws a couple of more contracts into the mix because they have a lot of firepower. It doesn't take much to move the market either direction. And look what happens. The market, the buyers keep buying up to here, up to 41.44. Now, where did we start? 40.18. Almost 130 points up in what? 3 minutes. 3 minutes, my friends. The smart money has goaded a lot of people into making long trades, okay? And so what happens? The smart money then, there's no more buying power. They start selling. They got their purchases locked in all throughout this range, and they start selling right up here. See, there's no more buying. There's no more buying pressure. See this? 1, 2, 3, 4. For 50 points, they just stopped buying. And so all the buyers, the unsuspecting buyers, were looking for others to purchase what they bought just moments ago, and there's no more buying power. So they have to dump their contracts, and they lose a considerable amount of money. But the smart money has bid the market up, 130 points. So then what happens? The smart money sort of keeps the froth going. They keep throwing some contracts in to keep the prices high, keeping buyers coming in. Buyers come in, and the smart money is keeping this party going. But then they reduce the pressure. They reduce the buying pressure. And so the unsuspecting traders who bought up here or maybe up here, they're waiting for somebody to take their position so they could sell out at a profit. But they can't because the real meat, the real heavy-duty hitters have taken all the froth out of the market. They're not buying any more contracts. So what happens? The smart money, they keep the froth going. You see, the market declines. Then the smart money comes in. They buy up a little more. Okay, more buyers come in. And then the smart money stops buying. And those buyers who bought over here, well, they're holding the bag all down through here. And what happens? Ultimately, where does the market end up? The market ends up right at the previous day's close, right at 39.92. So all in all, there was a 114-point gap trade opportunity yesterday. And for those of you who've taken my course and know the gap trade and know to look for it and know how to play it, you made over $5,000 on one contract yesterday. That's right, $5,000. Now that's how the smart money tricks you. Now, if you want to get the full sense of how the smart money uses tricks and traps to get you to make trades that are against your financial well-being, I have a free course at timelessdollar.com that'll show you just that. So go to timelessdollar.com, enroll in the absolutely free course, as in FREEEE, free, and learn how the smart money, all the plays that they use, all the tricks that they use to trap you into making trades that are against your financial well-being. Anyway, remember 2:30 today, you might want to stay on the sideline. Oh, and the Z contract expires on Friday, the 16th. We roll to the H contract, ESH or MESH, whichever you trade, probably both. But at any rate, remember on Monday, we're going to be trading the H contract. You can even trade it today. Rollover was several days ago. Have a safe day, trade with patience, and thanks for watching. I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.